Welcome to Money Matters. I'm DCrowell, and I'm the Senior Loan Officer at Mortgage Network here in Hilton Head and Bluffton and Charleston and Columbia. Mortgage Network is a nationally famous mortgage banking firm. It's one of the largest privately owned mortgage banking companies in the eastern United States, with 30 offices from Maine to Florida, several of which are in this part of the world in South Carolina. So today, my partner in the show, Emily Johnson of Polaris Capital, is not able to be with us. So I'm going to use the bulk of the show to describe the mortgage market, what kinds of mortgages are now available, and to basically sketch out that piece of turf. I know many of you who watch this show are very interested in the subject, since real estate and mortgage financing are pretty critical in everybody's financial life. So first of all, a little bit more about Mortgage Network, which kind of gives you the platform from which I speak. Mortgage Network is, as I said, a private mortgage bank. We write residential mortgages, condominium mortgages, townhouse mortgages, jumbo mortgages up to $3 million, little small mortgages down to $30,000 or $40,000 or $50,000. The typical mortgage in the low country area is the mortgage financing for the purchase or for the refinance of houses in the $400,000 to $600,000 range. That's the sort of median in the Hilton Head market. Bluffton market, slightly lower, houses in the median, $250,000 to $400,000. That's the median in the market. Of course, in both areas, the high end and the low end are very, very far away from the median. In Hilton Head, it's not uncommon for us to write $2.5 million and $3 million mortgages. In Bluffton, in the large plantations of Colleton, Belfair, Berkeley, it's not uncommon for us to write $1 million or $1.5 million mortgages. It's also very common throughout both markets, condominiums and small houses on Hilton Head, and many of the smaller houses in Bluffton, Okatee, Ridgeland, and throughout the rest of South Carolina. It's not uncommon for us to be writing mortgages for $50,000, $75,000, $100,000, $125,000, $150,000. So there is no limitation in terms of range. Mortgage money is plentiful and available. Mortgage Network's role as a mortgage banker, not a mortgage broker, but as a mortgage banker, is that we underwrite and make the decision and produce the money from within the company. We actually are the lender, and we make the decision. We do everything within the company ourselves. Like all banks, we assemble large packages of mortgages and sell those mortgages ultimately to Fannie Mae or to Freddie Mac or to through the secondary market with FHA guarantees, VA guarantees. So we do all sorts and all types of mortgages. The servicing of the mortgage, who sends you the bill every month? Sometimes in about a third of the cases is Mortgage Network itself. Last year we did $3 billion worth of mortgages. That's a substantial amount. And I think we retained servicing. That's to say, we kept the servicing so that we do the monthly servicing on about $400 or $500 million of that $3 billion. We released servicing, meaning that JP Morgan Chase or US Bank or one of a half a dozen other specialists at servicing actually are sending the bills and collecting the money. That has zero impact on your life. If we write the mortgage, we're with you forever. Any problem that you have, we are absolutely at the end of the telephone ready to assist and to fix the problem. Who you send your payment to really doesn't end up impacting you. But back to the main point. What's available? Where are the constraints? What are the high points, the low points? First of all, size of mortgage, no restriction. Second of all, amount of down payment. There's a lot of confusion and frankly nonsense talked in the marketplace about the down payment that's required. This is as little as zero. USDA, rural housing, U.S. Department of Agriculture, rural housing loans require no down payment at all. Literally, they are 100% mortgages. There are many choices that, from FHA to Fannie Mae to Freddie Mac, that require 3% down or 3.5% down. I've been in the business and have been a major producer of mortgages for 30-some years, and it's my experience that one way or another, virtually anybody can come up with 3% down. It may take 3 or 4 months or 5 months to figure out where you're coming up with the 3%, but virtually anybody can do it with some guidance and some help. So at the short end of the question, what's the least down payment that is required? There's half a dozen programs in the 0 to 3.5% range. That does not and has not been a constraint in the market. People who want a home can get a home at that end of the market with small down payments. A very important part of that low down payment market is the availability of VA loans, which we absolutely do. Anybody who has served in the military and has an honorable discharge is a candidate for a 100% loan. The other interesting thing is that virtually all of these low down payment loans have highly competitive interest rates. They often have a fee associated with them, which is financed into the mortgage, but the interest rates charged by the marketplace are highly competitive with conventional mortgages. As you move up to $400,000 and $500,000 houses, the amount of down payment required goes up to 5%. Above 450, 475, as the mortgage gets bigger and bigger, the amount of down payment goes up to 10%. And when you get to the really sizable mortgages, the really sizable purchases, $1 million, $1.5 million, then you're probably looking at 20% down. Again, in the second major variable, the first being size of mortgage, the second being amount of down payment, there really is very little friction. Almost everybody that we encounter, almost everybody that we sit down with and work up a strategy with. Almost everybody gets through that hurdle one way or another. In the second half of the show, I'm going to continue with the analysis of major mortgage characteristics, so hang on. Thank you.